Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 27th of October. So I've seen a real market meltdown this week with some really big moves on the indices, the S&P 500, and some of the currencies have really taken off. So we'll jump straight into the charts, see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and almost the most subdued of the currency pairs actually that we normally look at. This one, we've been pretty good in terms of what the market movement has been inside our range. Like we said last week, when it exploded past the 20 moving average, it always seemed to come back very, very quickly right through these levels here. So it was no real surprise to see it do the same thing here when it broke through only a day ago, tried to break up above 64 cents and then came crashing down and really stopped at that point. But, you know, the bottom end held up as well. So it's really important to understand that we've also got the support holding up the advanced move down to 62.70. Okay, so really, really good move there. And what we're seeing here, and, you know, I did spot this last week, we're starting to see that it's getting condensed. The moves aren't anywhere near as exaggerated as they were. The slowing down of the big move down has actually started to, you know, play out inside this really tight range between the 20 moving average and the support. And as that gets closer, it's almost like a coiling effect where the price is starting to, you know, coil and coil, and a breakout is generally imminent at this point. But, you know, which way it goes, well, it's going to be anyone's guess. The support you would expect to probably hold up. My inkling would be that we'd probably see strength from here and the move would be up, because generally when the support is actually holding up and the lower and the highs are getting lower and lower, the price is getting condensed, yes, but we're also seeing a slowdown in the advanced moves down. So technically you could make a case for a descending triangle here, but I'm not really into that, only because the support at this level is very strong. Okay, you got to go out a long way to see it, but it is there. So you can see right through these points here. This is a big support level. That's what you're talking about a long time ago. So you're talking about April of 2020, and again here at the October of 22, so basically last year. But yeah, that's generally a good indication of what normally happens when we get here. You can see the move that got to this level was far more aggressive than the one that got here this time. You can see the slowdown is really evident at this point here. So yes, we could push down a little bit further. Yeah, 62 cent mark is really the go-to, probably last line of defense. If it gets past there, it's in all sorts of trouble, but I wouldn't imagine that would happen short of anything that we can't foresee coming into the market. So if we do get a daily close below the 62.80, below this low here, the next point of call would be 62 cents, but that is the last line of defense. If we reverse from this point onwards, then that's not going to be a surprise to anybody, because we know we've got good support here. Okay, so pretty good trading. I would need it to do a close above the 20 moving average to get excited about going long. And if we do go long, we're only going to about a 64.80 to 65 cent mark anyway. So good range though. I mean, it's a pretty good range in terms of scalping opportunities, but I'd be keeping the trades fairly short on this one. So a break of the 62.80 would see us start to push down to 62 cents next week, but a turnaround here and a series of higher highs and higher lows, say on a 1 hour chart or a 4 hour chart, then we'd start targeting the 65 cent mark, but only when it's above the 20 moving average. If you're going to scalp, try and scalp. You keep your scalps between the 20 and this support level here at 62.80. And yeah, you should be pretty right for scalping opportunities, but yeah, just be mindful of the breaks of those zones. Over to the US dollar CAD, and onwards and upwards for it. It's done all of the things we needed it to do, of course. Last week it sort of pulled back a little bit, but then it was off. Look, it all but reached its target. I mean, really, if you were long at this point here, you probably would have taken it. Like we generally go, about 10 or 15 pips under where the main move is. So it's been good. Look, it's done all the things we needed it to do. Obviously, MACD is still rising, and it's not really showing any signs of weakness. We do know that this level's a resistance level low from what happened here. You can see here, very, very similar candle in the sense of how it got there. Then it had a doji candle and started to come down. So be mindful of this level, knowing that it has previously sold off it quite aggressively, and that sell-off was very aggressive. As you can see, we really rocketed down back to 133. So we're always going to treat that sort of level with a great deal of trepidation. I wouldn't go long past that level unless it went up there and then came and tested it from above. If it tests it from above, that's a different story altogether, and we're looking at it from a fresh lens. So I would be looking at this one and saying, if we're trading above the 138.50 on Monday, we're looking at a bit of strength, but I'd wait for a pullback to get there. But if it starts to weaken from this point on and we see a series of lower highs and lower lows, then we'd start to target a move back down to around that 137.50 in the first instance. That would be the first scalping zone between these highs here. Over to the US dollar yen, and yeah, this is trying to break through. Look, it's been pretty subdued in terms of how its movement has been this week. Very tight range, as you can see. Yeah, about 100 pips, but still, for a big currency like this, 100 pips is relatively subdued. You can see that we've got the 20 moving average still bolstering it up. It's been a technical analysis dream, as you know. The resistance is right there at the 150. It's broken through now, but it's one of those ones where I would wait for it to test it from above. If we get a bit of price action around this level here and a series of higher highs, then we can start looking at a move up to, and really up here, it's kind of uncharted. It hasn't been here for so long that it's, it really is uncharted. And I am very, very mindful, similar to the CAD, that when it did get there last time, it did this, and that started a free fall that lasted many, many pips. So I'm very, very conscious of that, and that's why I get nervous at these sorts of levels. But it's been good to us so long, all the way up here. So realistically, it's been a technical analysis 101 lesson. So really, if we get a continued sustained move up there, I'm still going to be quite nervous. I'd be keeping my trades very, very short, and by that I mean scalp. Not looking for big long-term moves from this point onwards. But if we get a reversal and it's trading below the 20 moving average, then we'd be looking for shorting opportunities and parking up at all of the levels that provided resistance on the way down. At 148.50 being the first stop. But I wouldn't be looking at shorting this until the daily close is below the 20 moving average. If we're going to daily close below the 20 moving average, that's a different story for it. But really good trading on the yen, but probably a little bit hard to do anything with it now until it actually breaks out of this little mini zone. All right, over to the dollar index. Done everything it needed to do for us. The candle that you needed to enter on was obviously the engulfing candle. Once you got an engulfing candle that engulfed the previous candle that broke the 20 moving average, you are in. This is a sort of trade that your dreams are made of, really. A break of a 20 moving average and then a complete engulfing candle that takes out the whole body and closes above the 20 moving average is a go signal all day. So it's done everything it's needed to do. It had a good rise up. It's pulled back a little bit, but look, obviously the euro is the one we're going to check out because it's the one that we would trade. But you can see that engulfing candle was what you're looking for. When you see a break of a 20 moving average, that reversal halts that momentum completely and overrides all breaks of that zone. The euro is similar in the sense that didn't quite engulf, but it hit the 50 moving average. It looked like it was breaking out, just like the dollar index looked like it was selling off. And then of course it hit the 50 moving average. But just as importantly though, yes, it hit the 50 moving average, but just as importantly, it hit the 106.80 level, which is a very strong resistance level. You can see this support here was extraordinarily strong for it. So, knowing that it hit that resistance level, that was actually your signal to, look for potential shorts. And they certainly came quick and hard, all the way back down to the 105 support level, the 105.20 here. It's had a big rejection now in the late part of the trading. You can see it's sort of pulled up and it's basically really trying to pin bar hammer at this point onwards. I'm not paying a lot of attention to that. While it's under the 20 moving average, I have no interest in this. And really, if you're going to go long, it needs to trade above the 20 moving average again. And at that point, I'd be looking for entries that will probably max out at around that 106.80 again. And until it breaks that level good and proper, we're not going to get excited about that move. So good trading though, but I would be keeping my options in between the 105 and the 20 moving average for scalping opportunities. So keep it between that 80 pip range for scalping. And if it's above the 20 moving average next week, I'd be looking for moves back up to the 106.80. But if a daily close happens to be below the 105, then I'd be targeting moves down to the 104 sort of 50 to 60 area where it was previously, which is the next zone. And finally, we'll look at the S&P 500. This has been the one that's really had a meltdown this week. It's been absolute bloodbath. You can see that it all started at this systematic point here where it had all sorts of resistance at this point here, then just continued to sell off. Found support where it needed to find support at this level here, bounced up and bang, down she came again. This has been a very, very big move. And look, realistically, it's quite simple on how we approach this one. We've got one more day's trading in the US. If we're trading whatever side of the middle zone here is where we'll aim for next week. So if it's trading above 104, the 41 sort of 20 area, which is the middle zone here, there is a lot of resistance at this point here. That was resistance, which is now support. If it's trading above that level on Monday, if it sustains one day of holding, then we'd look at scalping opportunities back up to the 4,200. But if it's trading underneath this zone, so if it's trading under 41.20 and it closes there on the weekly candle, and Monday morning we're looking at, you know, an under 41.20 area, I'd be starting to target the 40.50 as the next support zone. It's really in the middle of this channel, and where it lands on Monday is where I'd be going. I'd be keeping my scalping opportunities inside that. You know, I'm not convinced it's going to sell off any harder than 40.50 for no apparent reason. We need, you know, something to come out that we don't know about, or something to intensify the news. You know, we're going to have non-farm payroll coming up soon. Next week, obviously, we've got, there are things coming out. Earnings is all but over. It's going to have to settle down or really sell off properly. So that's a good thing. We're probably not going to get stuck in this zone for very long. But wherever it lands, if we're trading underneath 41.20, I'd be aiming for the 40.50 as a scalping opportunity. But if it closes on Monday above this level, then maybe look for a bit of a recovery up to the 4,200. But tonight's US session will be a very interesting one. So I hope you've had a great week's trading. Look, there's been fantastic opportunities everywhere. All of the zones that we've been talking about have been hit several times this week, actually. So hopefully you're able to take part in that, and it will be a very interesting close to the week. Have a great weekend, everybody, and I look forward to seeing you all next week.